What's up? Welcome back to the Vant and Put show. Look, pretty crazy out there. Had a slathering of headlines that obviously is about to implode the market. It was a rather spicy day of trading today. What's going on, Mike? How are you doing today?
Love it. Love it, baby. All I got to say is nasty, nasty, nasty. But is it not what we said? I mean, we get so much pushback, even from our trading group, so much pushback. Oh, the market's going to 3,200. Oh, it's going here, going there. And then, even during the day, that's an up day yesterday. And then just complete nasty rug pull today. It's like, and the thing is, and it's kind of like what Mal says. He kind of says it jokingly, but it's true. Where it's kind of like the sarcastic comment. Oh, well, Tesla's factory's closed. I guess that's bullish, right? Because Tesla's going up, factory's closed. I think we bearish event. Well, it's just like yesterday. We were basically Europe, UK, on the edge of a major financial catastrophe that they had to basically come in and just do an intervention. But yet somehow that's bullish.
Yep. Welcome to Market of 2022.
Okay. It's a great market to learn your lesson in. Let me put it to you that way. If you guys aren't taking notes and, because you're living through your own 2007. For those who haven't traded through 2007 and 2008 and, 2000 and 2001, well, welcome. I welcome you to our world.
Yeah. You can really feel the weight on the market today. You have the dollar dropping off, you have the rates dropping off. You have, just everything signaling that we should have a green day in the market today, and it is at lows, and it's probably going to break lows. And you can see all the headlines that came out today really weighing on the market, and it just seems heavy.
Yeah, Tyler. Okay. The UK just had their Lehman moment. And look, I'm going to kind of go into that, and it's a little bit different. Okay. Lehman was more of a cash flow situation, not a margin call situation. But the UK, is teetering. And I kind of want to show you something, to kind of get a perspective on this. And I should have set this up ahead of time and I apologize. But anyhow, I want to show you because, being somebody that's traded through, 2007, 2008, I want to bring up what happened during the 2008 crisis. Okay, because it's eerily very similar to what we saw back then. And so I want to kind of pull it up because Larry Summers said it kind of feels like 2007 all over again. And I agree with him 1000%. So I'm going to pull this chart out and let's go back 20 years. Okay. Lehman, for those of you who don't know what the Lehman event was, well, Lehman basically was a firm that I worked for. I started in this business in 1991. Okay. And, my second job right on Wall Street was working for Lehman Brothers. I was at 18 Wall, and right across from the New York Stock Exchange. And, I worked in there for many, many years. And, Lehman was considered a very, very prestigious firm as far as, looking at investment banking and stuff like that. And it was a great firm to kind of cut my teeth on and stuff like that. So anyhow, Lehman back in 2008 during the financial crisis, basically because of liquidity, and that's why I told you one of the things that the Fed's going to look at is liquidity. because one of the things that kind of put a chokehold on Lehman, AIG, Merrill Lynch, all those firms was basically they ran out of cash. They didn't have cash flow to really conduct business. Cash flow lines were shut down. The money market, which pretty much everybody invests in, it's like they consider it cash. It broke the buck, and it never breaks the buck. I mean, that's par. So, if you look here, back in September 15th of 2008, Lehman declared bankruptcy. This is what happened right in here. It was this day, and the markets. It was not a good day. And the interesting thing is that the next day the markets had to bail out basically AIG and had a forced merger on Merrill Lynch with Bank of America. So you had all kinds of stuff. You had cash flow running, just really tight. Fed, they did some things, initiated swaps. They initiated, it was the first time they opened up the reverse repo window. And so, the market, was in a little of a tailspin. But if you look right here, you can see basically, they took us down. But if you look right from that Lehman moment and from the time they bailed out AIG, this market still continued down from this level, okay, continued down and then went down another 45%. And I wanted to show that because I think it's important to understand that when you got a major, and you can see, as far as, went down 45%, you can see right in here from this bear market top to where we were, it was down 25% going into the Lehman bankruptcy. Okay, does that chart look eerily similar, Ty?
Yeah.
Okay, looks eerily similar. Okay, and this is why I'm kind of putting this out there. I mean, this chart, here's the top to where the Lehman bankruptcy was. It's interesting. You can see 2008, we've gone through this comparison before, and you can see here where we made this low and then we rallied out. And everybody thought, oh, look, we even got through the 200. Okay, isn't it? It's amazing. Okay, so we got to the 200 and look what the market did, Ty. Rejected and went down, made new lows. And then, of course, we had the, things just considered to get worse. And then that's when we had the real dump off. So a 25% going into that and then another 45% afterwards. So fast forward to where we are today. It's very similar circumstances to where we are today. We've got our 25% decline, which is right into here. So, and Ty, do you have your charts up?
Yeah.
What's another 45% decline from where we are here?
Let's see. 45% would be. I could go off the chart real quick.
Exactly.
165.
165. Okay, just checking. a 50% decline.
Or
yeah,
one
you're right.
What?
Yeah, you're right.
No. I was looking at the numbers. 200.
200. Okay.
200.
Gotcha.
I was looking at the wrong number. 200.
I don't think we're going down there. But I mean, that's kind of the basis of what I'm looking at. Because what happened, let's go over kind of what happened yesterday, Ty. I mean, what happened, and that's what you got to really kind of put things in perspective. What happened is, well, first off, everybody complaining about Boris Johnson. Well, you get this Czech Truss in there and, be careful what you wish for, right? She's basically pushed the UK over the cliff. With this new budget, basically, in an inflationary environment, slashing taxes, slashing everything, and it's just crazy. And the market has not responded well. And what you have is your Lehman moment over at the UK is the British pension funds, which we talked about yesterday. And they have these leveraged positions. And the bottom line is yesterday morning, they were all frozen. And the majority of them trade through BlackRock, clears their trades. And BlackRock, and it came out today, BlackRock basically froze their trading capabilities because basically they were going to force margin them out of positions, and we were going to have a nice big unwind. So instead of having a bank, capitulating, you had basically, the UK's pension system collapsing. Now, obviously, you can't have that, and that's why there was an emergency meeting of the Bank of England governors, and they came in and saved the day with basically a 2-week unlimited buy long-dated bonds situation. But so they did what they had to do, because prior to the 30-year gilt was indicating upwards to 6-7%. And so, and the reason I bring that up, the reason I go through that is because it's important to understand that, you have the 30-year gilt that basically, the bond pricing mechanism went up 24%, and then after the intervention went down 24%, they're still down 6% from last Thursday. So it's just crazy as far as rates. And so that type of volatility basically says something is broken, and the market, that you had to have an intervention. And of course, we just coincided with the fact that the market was so oversold that we got that nice rally yesterday. But that's why we're saying don't buy the rally, okay? It would have been nice had the rally been able to take us up to, it would have been nice, Ty, had the rally been able to take us up to like that gap fill. And I'll pull it up on the chart. Let me pull it up here. It would have been nice if we could have got this gap fill up here, and then rejected. But no, they just completely just pulled the rug out from everyone, and we're now down through lows, and just we're continuing to go and continuing below the 9 EMA. And the fact that we rejected at this 370 level was the key telling sign, especially with that really ugly close.
Yeah, agreed. And that's kind of one of the reasons that, after I saw we broke through the highs and pulled back, I was actually long pre-market. I was up a little bit, and then, all the economic headlines came out and just got fucked. I got just fucked. And that's what I get for having a little bit of faith in the market. But look, it's just, and I was reading an article today, and it's just true that, like, the market's so far behind the fucking currency crisis right now that it's got so much catching up to do, and that's what I get. But we had a few headlines come out. So we had the core PCE come out, GDP, we had unemployment claims. And none of that signaled positive news for the market, obviously. You still have a tight jobs market, unemployment claims beat. You still have hot inflation, core PCE went in hotter than expected. Negative GDP. It's just like, obviously the GDP print's the least of, the worries of everything else, but it's just a lot of shitty numbers came out today as well, just kind of signaling that Powell is still not making a dent on anything.
Yeah, look at it. Look at those numbers. Jobless claims, and I told you guys where the switch was supposed to go, right? The switch is now F inflation. Everybody and their mother knows inflation is peak.
Right.
Okay.
Right.
Now, core inflation still going to be sticky. Still going to be the important inflation print. Labor market is where it's at. I told you guys after last Fed meeting, they talked about labor market more than they talked about inflation. So the labor market being tight. So if jobless claims, they came in better than expected, which is not good news for the labor market. Okay? It's not good news for the labor market. So, we had jobless claims come in better than expected. And then you usually don't see the last third revision of GDP be a mover, but it does have that PCE deflator number in it. And it basically shit the bed.
Yep.
Okay, so the GDP, who cares about negative 0.6? We already know it's negative.
Right.
But what happened is it came in worse than expected, 9.1 versus 8.9, including core. Now, understand something. This is 3-month-old data that the market's reacting to. Okay? And the other thing that came in that I don't see many people talking about is that they upped personal consumption, which basically means personal spending came in stronger, which means the economy is hotter and stronger. And that, of course, all spells doom for the bulls that are looking for some type of give up on the Fed. So everything from the market, from the labor market, from the mortgage market, from the housing market is pointing to the Fed staying the course. The Fed is not changing. How many times I got to tell you that?
Yep.
The Fed is not changing. And the thing is, I mean, I thought this was an interesting stat. So if you wanted a $2,500 a month mortgage payment and you're putting $20,000 down, okay, well, back in 21, that would afford you a $759,000 house. Today, you can only buy a $476,000 house. And we know this. We're a payment society, right? And housing prices are not coming down that quickly. And so it's the housing market is completely out of whack and has more room to kind of cause destruction there. Plus, you got China. We haven't talked about China forever, but has Evergrande ever like folded yet? They haven't folded yet.
No.
So you have all these things lined up, and then you have an event like yesterday. And I got to admit, even today's action took me off guard as far as how quickly. I mean, it's just what they did today is nasty. Okay? Because look at it. Okay. Hold on. Let me get to it. This was yesterday's price action during the day. You can see the week close. Okay? This was the breadth and the upside volume yesterday. Right? You don't short that. That's like, a rocket ship. Well, look what they did today. I mean, yesterday every sector was green. Today every sector's red. And they completely just hammered the bulls that, we're all in here crowing that the lows were in. I mean, I get it. I mean, everybody's crowing that the lows are in, and here we go. We're going up to the moon, Ty. So, when you have a situation where there's major events going on and there's major liquidity dislocations going on, okay, you need to not buy into the thesis because there's got to be a reason for us to go up. And the only viable bull reason, and because we are in a bear market, okay, the only real bull reason to buy is not sentiment. It's not being oversold. It's if the Fed is going to pause or change their positioning. That's it. And the only way they're going to do that, and as you can see the stream of speakers today talking down the market, the only way they're going to do that is if something that happened over in Europe happens where the Bank of England had to change on a dime and capitulate.
Yep.
But that's not happening here. If you look at our credit spreads, if you look at what we're, everything is holding up. Yeah, they're getting worse, but they're nowhere near where they need to be in order for the Fed to start panicking. Okay, yields are nowhere where they need to be in order for them to start panicking. So, we told you what the game is. Watch the VIX, watch the dollar, watch rates. And the 10-year, this was a large bar for the 10-year. I mean, if you look back, you don't see any bars like that.
Right.
But even with that large bar, we still haven't broken the 9 EMA. I mean, this is still straight up and still not coming down to where we really want to see rates come down. So don't tell me the short bond trade's over. Don't tell me the dollar's top. Okay? And maybe they have, but right now, I don't see anything that makes me want to change my thesis and hop on the bull train. And every time somebody comes in, okay, and tries to dip by this market, what happens, Ty?
They get ripped and they get torn apart, basically.
Basically. Yeah, basically. They get ripped apart. So, anyhow, let's go through the markets and let's kind of, look, the monthly chart right back to where we came from. Weekly chart was green this morning. God, when I showed it to all my traders,
I know.
Was nice little green bar. But we said, let me go back. Sorry. We said we're looking for the 50 for stopping ground and the 200 on the weekly.
Yep.
So let me go back to the weekly. So we still got a little bit more room to the downside if we want to make that trip. The fact that we didn't break this 370 level to me says, forget it. Forget it to the upside. I just don't see it happening. Now, I can. The key though is if we kind of hang in here, and right now we're in this 362 to 370 range. If we stay in this range, then maybe you got some basing action going on. But today's action doesn't say basing action to me.
Right.
It just doesn't. This is not a market. They sliced through, and we'll go through the slice through levels right away. What are you looking at here, Ty, in the 4-hour chart? I'm going to zoom in just a little bit more.
Yeah,
you can see all those red bars.
Pretty much looking. The most important thing I'm looking at right now is what's going on with price in this zone over here. And so what initially I had seen is you had the previous June lows, and you saw yesterday, or I guess it was 2 days ago, break through the lows and come back above. Right, so then you saw yesterday rally out of there, breaking through this previous high. So we kind of broke the lows and the highs. But now, kind of what I'm seeing here is typically you're going to come down, retest this level, and then bounce from here. But considering that we already broke those lows and we already had grabs the highs and baited people long here, baited me and long, I think it's now looking pretty bearish that we're going to break lows and continue down, given that we had already grabbed liquidity from both sides and now it's time to go down. So that's kind of what I'm thinking as far as current price action goes.
Yeah,
we'll see.
I agree. This is a great liquidity grab. This is the McAfee trade. Everybody, it's just hilarious. I just laugh.
Yep.
I'm looking on Twitter. Oh, the lows are in, yada yada. Everybody wants to call low or a bottom. It's just crazy. Look at these 4-hour bars, Ty. Look. If you look here, this is what a bottom looks like as far as a test it and go out, right? Mm-hmm. And then look here. This is a rejection at the top. Pretty nice, huh?
Yeah. The main thing I look for as far as like bottoms here is you have the bottom and you had a tested higher low and it's good. You're gonna be good then. You had a high, tested a high, lower high, and you're good. This you never, you had a low. You never had a higher low tested. It's just straight selling. So there's no valid bottom here yet.
No, this is like the next day. It's not like we waited
right
a couple of days.
Right.
Anyhow, so we're short-lived above the 5 EMA, Ty.
Yeah, that's
still pointing down. It was actually, believe it or not, this morning was kind of pointing up, getting ready to turn. It looked like when we were going over it with traders, but just not happening. So yesterday's close was definitely a warning shot. So this was, you look here on the SPY, and this is that high I was talking about, that 370 level. You have Monday, you have Fridays, previous Fridays, you have Tuesdays. All those highs are at the same exact level. So they pierced it, like you said, and then they brought it right back and closed it like right there. And then once it broke through, it was sayonara in here.
Yep.
And this action, there were some heavy orders coming in here. And I noticed if you're in Discord, I put it in there. There was heavy put buyers yesterday in the IWM at 161. So, the big boys reloaded into yesterday, which I find really interesting. So we'll see, what that even means, if anything. But it's interesting that those puts, they're in the money. They're not in the money, but I guarantee you, from yesterday's action. If you bought 161 puts, they're up at least 300%. If you look at tech tie, not, tech was holding up better, but this looks like shit here.
I know. Well, tech's the one I was trying to dip by mistakenly, so.
So tech looking like shit. So right here, this level, this 267 level, we're still haven't gotten down and pierced these lows. So you still have a target in some of the other indices. If you look at the IWM, same thing. IWM still has a target. Those two have not broken through their 2022 lows. So that tells me you still got some more work to do as well. ES, pretty decent trader today. He had a nice rejection off VWAP. It was kind of playing this 50% level and these retracement levels from the news event. Actually, I was kind of mapping it up with what Simon was looking at. But, it just, complete just falling out of bed. VIX, well, we're slowly climbing back up. One of the trifecta I said you need to look at. The dollar, well, I'm sure you're going to get into the dollar,
yeah,
but from my perspective, you still haven't broken the 9. So it shows you how out of whack these securities are. Same thing with rates. So that's the trifecta going today. So, you're looking at transportation going back down. If you're looking at XBI, heading back down. If you're looking at retail, head back down to lows. If you're looking at financials, still heading back down. So all of the risk parameters that we're talking about is just right there. So what you need to do is long term, we pretty much, I think we have a good feel, unless something dramatic happens, where the markets are going. The key is how you trade it in real time, and that's what you need to look at and stuff like that. So just kind of going through some of the stuff. Okay. Well, I'll go through some of the chat while you're going through I'm curious your take on the dollar.
Yeah.
And you also had another really good trade, Tyler, last night. Your gold short kind of went off. So
yeah, baby. I was talking to you guys about that yesterday on the show. I was in that gold short. Real quick, Mo, for you, because I kind of pulled this up for you just so I can get this out of the way. Because I don't use moving averages really as far as crossovers, yada yada. But just to humor you, the 50 is this pink line, and the 10, or I'm sorry, the 10 is this pink line, and the 50 is the purple. And so you're referring to the last time they had crossed, we had a big dump and then rallied, right? But here's the way I look at what you're explaining about, because we had just crossed the 50 and the 10 right here, and you're expecting a pullback. Is this whole move? So basically, we're sitting at these most recent lows here, right? And that's equivalent to this most recent low right here. And so A, it's probably the same distance from where it crossed. B, it kept going, and if you look at where it kept going and had this pivot, it then reached the 1.618 retracement before we had the decent rally. If you look at where we're at now, and let's just consider that this is the most recent retracement, a little bigger than this one, is that the 1.618 is sitting at 320 right here. And so if you're kind of doing apples to apples, and you're looking at how much farther down can we go from the crossover. I don't trade crossovers. You're looking at 320 as far as apples to apples, as far as the Fibonacci extension goes. So just want to point that out. Although it's crossed over and you can do all that stuff, price action is still not even not dictating that you're going to get that rally. And I know you're looking at other stuff, but I just want to pull it up for you.
Yeah, and that's a good point, Tom. I'm glad you brought that up, and I'm trying to play catch up in the chat because when I get on a rant, I can't.
No, yeah.
I'm old. I can't look at two things and do something at the same time. But a couple things. Yeah, we don't use crossovers or any of that stuff. It doesn't work. You know what? The thing is, all that stuff you learn in technical analysis books, they don't work. The algos are built to that's why we talk about the look below and go and the look above and pop, that type of thing and drop. Is because algos are built off what retail traders typically do. And so you got to learn how the professionals think. And that's what we do in our mentorship, kind of change your mindset and try to get you guys. That's why we do this, try to change your mindset, get you to look at things a little bit differently. when I look at the 9 and the 21, I'm not looking for crossovers. I'm looking for active sequences. I'm looking for, who's in control of the market and where is value.
Right.
That's where you can really use the moving averages still, because I'm not putting entries and exits off of it. I'm just looking for, clues to the market. So crossovers, all that crap, that shit doesn't work.
Yeah,
okay?
I did that just to humor him.
No, that's good, and that's good because he wanted us to do that, and I didn't get caught up into the chat. So thanks for doing that. And Mark, repeat after me. We're putting you in the woodshed, okay? Simon just got out of the woodshed yesterday, so there is some space in there. Repeat after me. We do not try to catch a knife. We don't even play around with trying to. It's like when you're a baby and you go touch the stove and it's red and it's hot. What happens, Ty?
Yeah.
You learn right away. I'm not effing touching that again. We do not try to catch a knife. And see, that's why trading's so hard. And the majority of traders, 97%, aren't profitable. And the reason is because you bring these mentalities to the table, to the market, that you're taught. Like you go shopping, Ty, and you're always looking for a discount, right? You're always looking for something that's really good to buy. Well, in the market, that doesn't work because, you look at those charts, that looks like shit to me. I ain't buying that.
Yeah.
Don't catch the falling knife. To stay in this game long term, it's the odds, it's the percentages. Put them in your favor, and you're never going to catch a bottom.
Yep.
Falling bottom, catching bottoms, never work. Okay? If the professionals can't do it, why do you think you're going to be able to do it? And by the way, thank you guys. I appreciate all the money you guys donated. You bulls, because that's whose pockets the Bears are picking today.
Right.
All right, Ty. Sorry about that.
You're gonna get Mike going, guys. Come on.
Yeah, don't get me going, man. And look, this is learning, guys. This is a learning experience. If you're gonna waste your time sitting here listening to us and trading the markets and look at the markets, if you're not coming up with a game plan right now and learning and exploring and figuring things out, then you might as well just go play video games.
Yeah, exactly. And the Dixie is actually one of the reasons that, as far as price action today, why I think that this market sell-off is just going to continue from here, because when you have extreme down days in the Dixie, like yesterday, I mean, obviously an extreme down day, and the SPY, you had, a very strong up day. Dixie, another nice strong down day, and the SPY just eating up yesterday's price actions. And so there's so much just weight on the market and negativity and negative sentiment still, even with rates down and dollar down, that we're markets down. So not a good sign for the market there. And if you look at the dollar yesterday, this 115 level we tapped, and then we had a big rejection, and we had a nice bearish engulfing close. And I talked about it this morning, is price action was setting up for a really nice dollar short, which is a reason why I took the market long, because I thought, weak dollar, we're going to get, bounce in the market. Didn't work because of the economic headlines, so that's fine. But, I mean, the dollar broke structure yesterday as we broke through these ascending lows, came up this morning, rallied back to retest the backside of that trend line and to retest the daily resistance we had just formed. And then it was sometime in the morning, I hopped on somewhere around here, and I just said, look, expect the dollar just to continue to melt today, because structure is already broken and retested, and so we should continue down towards at least a 110, 111. And that's what we're getting. And looking at the daily, I consider 2 candlesticks a tested structure and a confirmation of resistance. You had resistance and then confirmation on the retest, so I'd expect a continuation down to at least retest this previous consolidation or minor consolidation at 111. And we talked about it yesterday. Every time you get some type of parabolic move like this in the dollar, you get a rest, you get a pullback and a rest, and that's what we're seeing right now. And like Mike said, if you think that this is the top of the dollar, you better hang your gloves and your apron and stop trading, because look, anything can happen, but there's just there's no reason to expect that this is the top here. I mean, in the pound, the euro, I mean, look at the freaking pound. Where the hell did the chart go? Pound USD rallying to fill some of this move here, but the strength in this move and where we're at relative to the other currencies is still weak, and so this is just really just an oversold bounce here, and of course the dollar, you know, still maintaining elevated levels here just to pull back. So I expect a stronger dollar. Maybe not tomorrow or the next day. Remember, tomorrow is the last day of the month, and so you get some. You typically get some price discovery at the beginning of the month, end of the month. You get some settlements, and so.
And it's not just the end of the month; it's the end of the quarter.
That's right. That is a good point. That's a really good point, and that's going to make a difference as well. As I forgot that was the end of the quarter. Very good point, and that makes a big difference for currencies, for the dollar, and if I hop on the 3-month chart here, that's the quarterly chart. This quarter, I mean, the way it's fucking ending here, dude, it's just the quarter's sitting at it's sitting overbought, but it's not really overbought yet. I mean, it's sitting at just like minor overbought, so we still have plenty of room to go. You look at where we're closing. I mean, 120 is like in sight here, so. I don't think by any means that the dollar's done yet. Maybe we get a temporary pause and sideways action, but not jumping in front of a train. Gold. I don't look.
Gold in those hills.
Yeah, dude. Gold's a fun day trader, but obviously because that's what I've been making my money on. But it's just obviously not an investor right now. The shorts actually ended up working out really well overnight. This is a short that I wrote down. Actually almost caught it perfectly from top to bottom. But the fact that the move today is still finding resistance and struggling at the 1660 top yesterday with a weak dollar and weak rates is not, it just shows that there's a lack of strength in gold here. And if you look at the highs, right, you look at the high here, showing some divergence on the charts. And I talk about this a lot, is when you get trend line breaks, right? The way that the signal that you can take as far as, okay, when is this trend line break going to stall, is when you get that double top on this trend line break here, and then it's gone, you know, going back down. So this for me kind of seems like we're getting that double top confirmation with divergence that, hey, this move is done and we're heading back down, and so this move in here seems like it struggled going anywhere, and so it could be after such a strong day yesterday we're kind of consolidating, so that's something to keep in mind as well. So you have to wait for confirmation because typically that happens, but if we start breaking, as far as I'm concerned, if we start breaking 1655 to 1652, more than 50% of this entire move here, then it's most bears are going to be in control, and it's most likely to get knocked back down towards 1630. So watching 1652 and then watching 1662 as far as where gold can go in the short term here. Oil also really struggling to go anywhere today. I thought that we were going to get, me and Simon were kind of on the same page today. We thought we were going to get
wait a minute. You and Simon were on the same page today?
Yeah, you know what? That's because Simon's smart. He decided to start trading 8 o'clock, and he's smart, and smart people think alike. And so he's already learned.
You corrupted him.
Simon's already learned over here how the oil market works. And look, we're looking for that second day run through highs here, and then a push back down. We didn't really get anything today, so oil most likely is not going to go anywhere, in my opinion, until OPEC meets. There's a lot of talk about their production cut, which is most likely happening. As far as reports say, probably will happen. That's going to prop up oil a little bit because they've already expressed their concern how low oil prices are right now. The disconnect between the spot and physical market, and so they're trying to prop it up and fix the prices, and so them doing that million barrel per day production cut could help prop up the oil market, and so that's where that dip buy could come into play. So we'll see. Going to keep an eye on, that's next Wednesday, the meeting. So you'll probably see oil consolidate in this range here. Until then, could have some decent trading, but most likely going to be choppy. I'm going to wait to see what happens with that. But right now, as you can see, we're just chilling in this tight channel here. And so most likely you find a top here, head back down, and then just chill in this zone until OPEC meets. Bitcoin, Bitcoin's not doing anything today. Not doing jack shit.
Surprise! When does it ever do anything?
Not, dude. Look at this. Look at this last 2 weeks of price action in Bitcoin. Absolutely nothing. I mean, markets at lows and Bitcoin's just fucking chilling here. So, for those of you who trade the correlation, I don't really see a correlation here right now. Bitcoin just been sitting at lows for ever now. So,
tell Mal that he loves.
I know he does.
Bitcoin.
I know
he loves his Bitcoin.
Dude, it's just I don't know, man. But it's fine. But interesting note that NFT volume is down 97% from January spike. And so you kind of see that in the crypto market because Ethereum is built off NFTs. And you can kind of see that in the crypto market that obviously there's been a lack of volume and a lack of investments, a lack of excitement in the entire NFT and crypto space. And so until investors are ready to get back into all that bullshit, they ain't going anywhere. And it's,
And it's not going to happen. I mean, look, Bitcoin went up during a risk-on euphoria era. Now, no matter what happens, even little bounces. I mean, you have the SEC going after, what's not the ruble? What's the name? The one they're going after, the coin. They're basically saying that it's Ripple. That's it. Yeah, Ripple. Basically saying that the problem is if you look at the flows, there's no trading of Bitcoin. People are just, they're done, man. I mean, they're trading the ETFs and Bitcoin's not doing anything. I read an article too, somewhere to the effect of 15% of the Bitcoins have been lost by. Isn't that interesting? So from a supply and demand standpoint, if that's true, okay, then why isn't it going down further? I mean, I think it's just dead money, dead in the water. It's just sitting there waiting for, look, to me, the risks are to the downside, not the upside. Because again, you need a reason for it to go up. I see no reason for Bitcoin to go up, and only if the markets capitulate and fall down to the, fall dramatically and crash. What do you think is going to happen to Bitcoin? It's going to crash.
Yeah,
so that's my take.
I think, no, you're right. And I think what's, propping up Bitcoin is the lack of selling in the investors who are actually holding, as far as the people who long-term hold, MicroStrategy, PayPal, Tesla. And once we see the risk on in cryptos crack, we see the market capitulate, I think then you start seeing people having to sell their Bitcoin, and then it's going to cause a bigger crash than you would even imagine. So I think it's just a matter of time, like you said, before that happens.
Yeah, and that's a good point there, Mal. I mean, look, wash trading is basically if I own Bitcoin, well, I'm going to sell it to Tyler, and he basically we report that transaction, and he sells it back to me.
Yeah.
And so you're getting people trading the shit back and forth.
Yeah, that's how it's moving, right, exactly.
Yeah, so I agree. Well, crazy stuff, man. Yeah, Mo.
Why do you sound
what are you
surprised,
surprised?
Why do you sound surprised?
Sometimes I don't think you guys just don't listen to me at all.
I'm going to end that poll, and looks like the people who voted yes are probably going to be correct.
I don't know. We're not there yet, Ty. We're not there yet. Don't jump the gun. I'm not saying which way I voted, but don't jump the gun. I think Mark will definitely be upset if you jump the gun there.
I think Mark voted no.
Of course he did. He's our resident bull, but that's
okay,
Mark.
I don't know why it doesn't tell me who voted which way. I wish it did. I want to know who voted which way. So JT voted no. Mo
We're gonna have
voted
to
yes.
drag the. Since I got money riding on this, me and Mark secretly bet $100. No, I'm joking, but I'm gonna keep the show going until it does break. But
Yeah, right.
anyhow, yeah, I mean, look, I agree with you 1,000%, Ty. And there you can see the SPY. I mean, we're back down to Tuesday's low here, so lucky us. But technically, you said break the lows of the day.
Yeah.
And the lows of the day, assuming this is not a wick, is 360.59. So we got another 40 cents to go.
We're coming.
Oh, baby, look at the VIX, man. VIX is rising. You got the dollar kind of, rising. And as far as there is a dislocation, by the way, with rates today. I thought it was really important for you to bring that up. And I think the reason there's a dislocation on rates is because really, they're really still within. They gapped up, like they're inside yesterday's bar.
Right.
Right. And I think that's why you're still seeing that dislocation in rates. I think had we been below yesterday's bar, I think it would have been, you would have been spot on with what your trade, because I kind of followed the same thing, and there was a dislocation today, and I think really that was.
Yeah. That's crazy. The thing rode the 9 right up and hasn't broken it yet.
No, and that's my point, and that's the 9 and 21, man. This is look at this. I mean, it hasn't broken it yet. I mean, for those of you who've been watching us, we gave you sorry about that. We gave you a great ride in 2000 and 2021, right? I mean, you got to give us our props back then, because we basically, were riding the lightning all the way up. And look, this is what an active sequence looks. Remember,
right.
Ty, every time it broke down to the 50, it was okay, that's value. Look, we even circled it.
I remember dip buying it every time it hit the 50.
Guys, this is how you invest. This is how you trade, okay? Came down to ride the 9, 21, get some value. And you're right, Mo. You're using those moving averages, okay? You're using those moving averages in order to discern value, okay? And you can see every time we were buying back in, and then once it breaks, you're out.
Right.
Okay. And it's the same thing that you got going on now. So.
And that's a good point. As far as using moving averages, I use the RSI not as signals, but as an indication to me that maybe we're in value or who's in control. You use it as like, okay, we're in value, or maybe who's in control right now. So you kind of use it that way rather than signals.
Gotcha. Yeah. So, Ty, we're so close to coming down.
I know. I want to hit the freaking button.
I mean, look, if again, and this is how you trade too. How does the market react around levels, right? This is an important level that we kind of highlighted, and you can see there's, it's not a coincidence that the market bounced out of these levels, and it's not this is what I was talking about. In 2000. If it broke a level, you could initiate a short, and it would 9 times out of 10 be a good trading area to short. Now, with the algos, they read the same technical analysis books, and then they flush you, grab in your order, grab your liquidity, and run you up. So the key here is we're at this important level. It's not some kind of secret voodoo or magic that the market's kind of dilly-dallying right here. But like you said, we said what, 360.59. We're 10 cents
Come on,
away.
Baby. I'm hitting the cheering button once it crosses.
All right, you got to drop the money sign, man.
I will drop the money sign.
8 cents.
Come on.
Yeah, come on, man. Are we allowed to give people money? We should give people money for the winning side of the poll.
That's what I was saying. I was like, we should
look into that, Ty. Is that considered gambling?
I don't know. I would love to reward people for being
being on the right side of the poll.
That'd be fun. I'm gonna look into that. It'd be fun.
If you just now, you know what my favorite saying is. The traders kind of get we laugh at it, but I say don't be a dick for a tick. Oh, we broke it, Ty. We broke it.
Yeah, baby. Winner, winner, chicken dinner.
Winner, winner, chicken dinner for all of you guys, all you bears that voted. We were going to. So JT, I'm sorry, man.
I'm assuming Mark.
That's okay. That's okay. You know, the VIX, look, guys, I mean, when the VIX is over 30, 31, where the elevation of the VIX is, you know, I tend to have better trading the indices and commodities and stuff like that rather than individual stock. My list, you know, we were doing pretty good with the list, but I mean, I took 2 trades in stocks. The one I'm really upset about. So I took Rivian right off the gate. This was on our list. It had an upgrade. And, you know, I basically had an order in for a 50-cent gain. We got it at 20 cents. And they didn't take the order. We were watching with what Chris was trading it. They didn't take the order, and then it kind of just fell back. So this was not a winning trade. Just trying to play the imbalance game in there. Another stock that was on our list today, Netflix, 1.5, but that's it. You know, nice little trader right here. You know, we called it out in Discord, got a nice 1.5, but it just, you know, it wasn't. It's not something that, you know, we're going to get 14 points like we got yesterday, right? Just incredible. I was trying to go off, you know, with the whole LME thing where they may be banning Russian gas.
Oh, that's right.
So I thought Nucor, the steel companies, would go. Now put a great piece of, you know, article in there and great information, and even gave some stocks that, you know, would be affected. So if you want to look at those stocks, go in Discord and look at them, because it's really good piece of information. That's what I love about the guys we have in our Discord. I mean, not a lot of them, but I tell you what, there's some value between Born Alive Now and everybody, Mark, JT, and the traders. Everybody it's not like people in there saying, you know, oh, what's Trump going to do, or you know, what's the Queen's hair look like, or something like that. We actually got real traders in there that are actually, you know, providing some decent analysis and opinion. And believe it or not, when I can't sleep, I go through and read all this shit, and I actually laugh. But
yeah, well, you know, if you can't sleep, hop on and trade the futures market, and you can.
Yeah. So Mo, have a good one. Nice to have you in here. You know, I guess Mo's upset because he had called. I think he got called on the wrong side.
That's all right, Mo.
Of the market.
That happens to the best of us.
Just incredible analysis, and I gotta give you guys props, man. Really good analysis in the room, and I really, you know, I think the LME trade's going to be something that eventually may work out, you know, in a better tape, and I really like that. What's up, big man?
Big man.
Big man's in the house. Yeah, big man, it's brutal out there. Hey, by the way, I don't think big man is, but hearts go out to everybody that's out in Florida.
Oh shit, I know.
I mean, we didn't even mention that. You know, we our fund is building a condo tower in St. Petersburg, and I haven't even checked in with Michelle, but it's getting obliterated. I know it is. Now, we haven't even broken ground yet, so I think that's supposed to happen any day. But we know a lot of people in that area, so definitely our hearts go out to that. But yeah, it's brutal out there, big man. I mean, it's, you know, nice nasty reversal in here. You know, it's the market's broken. It's just like we said. And you know, I going back to the LME with the metals, and they may be banning Russian metals on the exchange. You know, that's gonna, you know, you're already seeing aluminum prices pop up. You know, you got Alcoa that you should see a trade out of eventually. Maybe you got FCX. You know, copper's involved in that as well, as far as I understand. And of course, I always look at Nucor. They're all hanging at just depressed levels, and with this tape, nothing's going to work. So we're kind of staying away. One trade that did work, I give Chris New York Chris a prop out today. Is DVN. Now, with the old trade, we were looking for a possible gap fill in here this morning. This is one of our top trades. You know, once you got this 200, got back above the 200, it was a really good trader. So props out to New York Chris for grabbing this dip buy in here. And it kind of gave you a nice little trade tie. I mean, just
Yeah.
a nice little trade out of here. Once you see this consolidation here and this consolidation and then break out of it, it was a nice drive up. Look how it rode the 22 all the way up.
Yeah, that's nice.
So nice trade. I got to give a shout out to him. Oxy was on our list. That was a good trader. To an extent, same type of trade. Big Daddy Warren. I mean, you can't go wrong following Warren. He's in that trade. Stuff like that. So
Right.
big man in Florida, man. Sorry.
I don't think he's in Florida. He's talking about the
He's
car.
not. Oh, the car. Okay, I thought he was in Florida. We had somebody.
Alexis is from Florida.
Alexis is. That's right. Hey, did you see, by the way, the video of the shark that was swimming through the streets?
Is that for real or is that?
It was for real.
You're
It was
shitting me.
on like a news event. Like, yeah. So
I saw the freaking alligators all over the place, but the crocodiles.
Well, and did you see the guy, Jim, what's his name? Jim Cantori or whatever. He was actually getting blown. He had to go grab a pole, and then the pole started getting blown away.
Nuh-uh.
Yeah, that shit was great.
I didn't realize that reporters in storms put condoms over top of their mics. Did you see the picture of that lady who had a condom over top her mic?
I did not need to know that. She did. She had. Is that true?
Yeah.
Wow, that's crazy. That's crazy. Had a condom over the mic. That's insane. Big man's in UK, so God.
Oh God.
God help you. So big man, you know what's going on, man. The pension system just about collapsed. You almost had your Lehman moment. But and I hate saying the Lehman moment, but it's kind of like the type of risk moment because Lehman wasn't a margin call situation, which is what this was. Lehman was more of a cash flow situation where liquidity dried up, and that's what we said before. That's where the Fed's going to look as far as that's concerned. So with what's going on in the UK, this is why our markets are not doing anything, and the Fed's not going to pivot. And if you thought the Fed was going to pivot, the parade of investors that we had today, Ty, I mean, not investors, but speakers. I mean, you had Bullard doing Bullard things.
Oh, gee, Bullard's out there again.
Yeah, you had Mester doing Mester things. These. You ever look up the background of Mester, by the way? She is like,
no.
These people have no real world experience. None. So. I don't know what to say. They're getting ready to drive us over the cliff again, and so enjoy. Oh, by the way, Q's. All right, we're getting a bounce. Oh, I missed this trade. Q's bouncing off lows, off 2022 lows. We finally made it there.
Oh,
Ty.
we made it. Or we made it.
Oh, that was
already?
a trade. Yeah, I called it, man. Damn, you guys costing me money.
Mark tried telling you in the chat.
Oh. Who did? Mark?
Mark tried telling you.
What did you try telling me?
The QQQ's at the lows.
Oh, I gotta listen to Mark more. Mark, look, this is the bounce, man. I mean, this is the bounce. Now, I'm not saying it's going to last. I think we pierced through it because we still haven't gotten to IWM lows. But these are the type of trades you need to take. I mean, and this is how I trade, unlike any other trader out there. People that trade futures don't look at the QQQ. Okay. But yet, if you go switch over and you look at the ES, look at the bounce we're getting at there's no level there. And if you're just looking at the ES, you have no idea why we're bouncing. Yeah. No idea. And this is a nice little 7-point bounce. I mean, that's $350 a contract. So, damn, that sucks. Missed that trade. So Q's officially getting us down to the lows of 2022. That's not a bullish environment, guys. So I would look. What do you think, Ty? Rejection rate here?
Yeah, that's what I would look for. Yeah, definitely. Rejection
of the early hour trade bounce level.
Yeah.
Yeah. So that's what if we even get up here, this is a nice level to definitely maybe reshort if the bounce does continue. Because you also had
if we get an extended bounce, look at that VWAP projection for a short. If we get an extended bounce.
No, I like that too. I like that a lot.
I don't think Mark the IWM took out the 52-week lows yet.
I don't remember that. I don't
think so.
Hold on, let's look.
Go to the
Let's
daily?
look. Oh no, well, hold on. No, it's not going to show you. He's talking pre-market. Let's see. Let's see.
It's not
It
pre-market.
did get down there. It did get down there, but I guess technically.
Oh. Ah. Yeah, but there's no well, fine.
No, I get it. I mean, look, yeah, you
Fine.
want to see it broke during RTH session. Yeah, man, you're talking like a hair that it broke, if a penny, if anything, right? I mean, I can't even go in there and see.
We gotta squint my eyes. I don't...
Good call out, Mark. See, I told you our guys are smart.
See, Mark pays attention.
Fucking traders are smart. Tell him. We just got to get Mark to stop trying to catch the knife.
One of these days,
But,
he'll be right on the knife.
Yeah, well, yeah. So, all right. Well, that's about it, guys. I mean,
Yeah.
look, there's really nothing else to say. You know, when you have breadth that looks like this, just like yesterday, we said not to short, right? I'm sorry. Just like yesterday, we said on a drive day like this, you don't short. You know, the same thing in here.
Yeah.
You know,
Right.
you're not trying. You're not really trying to be a hero in here and initiate long-term positions. So let the market play itself out. And plus, the fact that the market is having, we had an 89% up volume day yesterday, and then have this type of day the very next day that's not healthy. First off, that's a bear market situation, obviously. But it's also, because every time, you got to think about it like this, guys, every time a trader tries to dip by this market, they get their hand burnt. So eventually, what do, Ty? They capitulate.
Yep.
And they give up. And only then are you going to really see, some kind of euro. So SPY, I don't know. I'm getting ready to reinitiate a short in here, I think. I'm waiting. We just can't get, guys, we're down 3.6% in the Qs. Okay. We're down 3% IWM. We're only down 2% the Dow, 2.7% the SPY. So, I mean, sectors are all red from the open. Okay. Gold miners, which is, don't get me started with Born Alam. He's not in here, but, he called it sexy again, Ty.
Oh. God, of course he did.
Yeah, real estate, man. How the hell can you buy real estate?
Yeah.
Right. I mean, the prices haven't. I did not. You did. You're right. You're right. I did. I said, he was all excited about the miners, which I was in for.
Oh my God.
And I said, Born Alive. Yeah, the miners. Now the miners are sexy. But again, I just can't. This fucking chart. I can't buy this chart. Can you?
No. Nope. Definitely not.
I mean, I had a good trade. It's NEM. I had a great trade in Newmont Mining. When we were kind of getting some action up in here. See, look. Here's another example, guys. This is an active sequence. Okay. Buy when it gets to 21, off you go. Buy when it gets to 21, off you go. And then when it breaks, you're out. That's how you trade and invest. And now look at the active sequence to the downside, Ty. Look at this.
Yeah.
I mean, look what's been the lid. It hasn't even gotten to the 50. This, since the beginning of the year, active sequence to the downside, we just started to see some action. So I need to see basing action, and I need to see it consistent. Now, the 50 is getting tighter with these moving averages. RSI is kind of maybe kind of diverging a little bit. So maybe it's starting to look, but I'm not buying until it gets above here. Because then that tells me there's a move on. But right now, I just can't buy that chart. I can't do it. Just can't do it.
Yeah.
So you stalk it, brother. All right. Well, we're now turning back. Shorts are paying. So enjoy the lows, guys. We're gonna I don't know what we're gonna do, Ty.
Well, I want to go.
Go hit the floor.
Yeah, I do
Hit the
something.
desk.
But enjoy your weekend, guys. Have a great weekend.
Yeah, that's right. It's Thursday. No shows on Friday. Yeah, guys, have a good weekend. Look, the one thing we didn't bring up it is the end of the quarter tomorrow. We did bring it up, but all quarter ends recently have been kind of bad, right?
Yeah.
I mean, it's been pretty negative. So, I mean, who the hell wants to window dress that they've owned stocks in their fund at the end of the quarter?
Yeah. Not
right?
Gonna be good tomorrow.
Typically, when you get the quarter end rush, is the funds, they have to report their holdings and they window dress. So if they buy in the last day of the quarter and they missed a run up, well, then they can pop in there and say, hey, see, we're in Apple, because investors are too stupid to read through the prospectus.
Right.
But yeah, but Mal, how do you want to window dress in a down market? Do I want to open a prospectus and see that you were in Newmont Mining Corporation?
Right.
So I think that's the pressure that we're seeing. I think institutions do not want to be shown as a holder of stocks. I rather see that I'm a holder of bonds, a short, somebody that short bonds. So to me, if I'm thinking through it, I would think that they would be shorting bonds to window dress, and they would be selling stocks. That's that's my guess.
Yeah.
Anyhow, have a good weekend. That's true. True, Matt. Have a good weekend.
All right, guys. Have a good one. Thanks for tuning in. And we'll see you later.